The COVID-19 pandemic has had a tremendous impact on the local and global economy and our way of life. We interviewed Lakshman Silva, CEO of DFCC Bank, which has been operating in Sri Lanka for 65 years, to discuss how financial institutions like DFCC Bank have had to adjust to challenges brought about by COVID-19.
We have provided VPN connections to our own staff members, and work from home was introduced early. Banking is such that it's very difficult to work from home, but nevertheless this had forced us to do that, and I think we were ready to go. When the things became very difficult for us to work as an essential service, we had to provide the services to the clients. So at the head office we had the skeleton staff. Outside Colombo, all the branches were selected on a selective basis, and people were put onto roster to come and work. And so I think we never saw an impact to the business relationships or customer service, and we had been very successful in that sense. If you really look at the customer's point of view, customers do like to come and interact with the banks. Historically, we know distant banking, technology-driven banking had actually taken a very slow start. And we as a DFCC Bank was ready for that actually. We had been driving our digital initiatives. If you look at the virtual wallet, the cash management systems, all account opening, majority of things were done through digitally, and so adapting to that under these circumstances was much easier for us. And we also had the mobile units for delivering cash to their doorstep, and also our mobile banking facilities what we have, all that also was actually half done prior to the COVID. And with the COVID, I think we are going on a full scale, full implementation. We get the customers to apply online, open accounts, so that made things easier. I think our top priority was about the health consideration of our employees. We have about 2,200 plus employees, and majority of them, if you really look at, are dealing with external parties. So they were actually, we didn't want to risk any of them. That is number one. Number two is the banking is such that the people do interact with our bank, our frontliners. So they do visit the bank premises. So we have to protect the customers as well. So I think in that light, it's a new experience for all of us. So immediate our reaction to that was to make sure that our clients are fine and good, they can work without any interruptions, but unfortunately the economic conditions didn't provide them to do that. So we have given extended relief to all our clients until 31st of May, where no payments were asked to be made. And if there were individual clients who had made payments, we made the refunds to those clients and got them to, to be comfortable with their fixed incomes that they earned during the moratorium period. So we had done that part. In addition to that, we were a great participant in the government-lended, government-organized credit line by the central bank, where working capital facilities were provided. So we also have introduced our own credit line without any support from anybody and at a concession rate. So we find that the export sector is a sector that is got seriously affected by this. So we are now concentrating of bringing up the exporters who have got affected by the COVID-19 at a very concession rate of interest to provide working capital facilities and long-term capital expenditure for them to come back to the market quickly as possible. I think the rating agencies downgraded Sri Lankan's sovereign rating several times. So we being an organization within Sri Lanka, we have to expect these kind of calamities. So I think it's going to be a challenge to the financial sector, not only to DFCC, everybody else. Having said that, very recently, Standard & Poor's, who also rates us in on an international level, on our international debt rating, they have commended about the strategy that we adopt, the model that we use, business acumen that we have. So in that sense, I think we are very happy that an international rating agency have recognized our ability, the capability and the capacity to deliver. So one of the major challenges that we are facing as a banking sector is the liquidity issue. how would you bridge the gap that is created due to these long moratoriums that are granted? Government have granted a 50 million working capital credit line, which is not going to help the whole community in this country. So therefore, I think banks are now looking at various other mechanisms to improve their liquidity position because the stock market had not been good. As a result, our investors' attraction is very low for financial sector, especially financial sector. Then overseas lending, when you go for borrowing, there is an issue with regard to the sovereign rating that is applicable, so the cost is going to go up. So I think these are few challenges that we are facing, but I think the banking sector is very strong to come back again to the normalcy very soon.